Welcome to our presentation about Meta Platforms Incorporated, or simply Meta, which some of you might still know under its previous name Facebook. Meta is a multinational corporation with a strong focus on social media services and was founded in 2004 by its current CEO, Mark Zuckerberg. In the following presentation, we will shed some light on different aspects regarding Meta. So let's begin with the business model. Meta offers a variety of products which can be classified in 5 groups: the well-known social media and messaging apps, including Facebook, Instagram, Messenger, and WhatsApp, as well as the virtual and augmented reality products Oculus and Portal, the business app Workplace, and last but not least the digital wallet Novi. However, 98% of Meta's revenue in 2020 was generated by only 3 apps: Facebook, Instagram, and Messenger. Their underlying business model is the same. They are so-called multi-sided platforms, and that's the business model we want to focus on. Multi-sided platforms are platforms that bring together 2 or more groups of customers that depend on each other. In Meta's case, the platforms are the 3 apps, and the main customer groups are the users on the one hand and the advertisers who run campaigns in these apps on the other hand. The platform's value for a particular user group depends substantially on the number of members of the other group, meaning that, for example, the more users Facebook has, the more attractive it will be for advertisers to place their ads on Facebook. Another effect that appears here is the network effect. In order to attract users, Meta offers its servers for them for free, whereas the advertisers have to pay for the ad placements. Meta's revenue is therefore nearly completely generated from selling ad placements. So now that we understood the main concept of the business model, let's have a look at the markets Meta operates in. Meta's main markets are social media and messaging tools, as well as digital advertising. Regarding its users, Meta competes in the first market. As you can see, in December 2020, Meta's social media and messaging apps were already used by 72% of all internet users worldwide. That means that of its total addressable market, Meta already serves nearly 3/4. In addition to that, when looking at the amount of monthly social media users, one can see that Meta's apps are the social media apps with the highest amount of users, apart from YouTube, which makes it the market leader. There's a lot of competition in this market. Among its competitors are Alphabet's YouTube, Tencent's WeChat, as well as Snapchat or Twitter. Regarding the advertisers, Meta competes in the digital advertising market. Meta has around 10 million active advertisers, of which a lot are smaller businesses. Its advertisement revenue in 2020 equaled 22% of the digital advertising spending worldwide. The biggest competitor in this market is Alphabet, with its Google advertising, which covered 39%. Other big competitors are Microsoft as well as Amazon. Meta's success in these 2 markets is based on the value it proposes to its customer segments. The value proposition for its users is already given in Meta's mission. Meta wants to give people the power to build community and bring the world closer together. Therefore, the value to its users is to stay connected and be able to build new connections. In addition, Meta's platforms are also a source of information and entertainment for users. Regarding advertisers, Meta offers the possibility to target a specific audience. Meta also offers free tools, for example, to track the performance of ad campaigns or for setting up an online shop. In addition, Meta's advertisement placements are usually cheaper than billboards or TV ads, which makes it also affordable and attractive for smaller businesses. So, regarding the value chain, one can see that it differs from the typical value chain, as Meta does not produce products in the first place. Meta's primary activities are to update and develop platforms, as well as to receive content from its users in the form of text, images, likes, etc. This content is then used in 2 ways. For the users, it is transformed into a user-friendly format, which also includes the elimination of inappropriate content. The content is then displayed on the user interface. These activities are a free service for the users. For the advertisers, however, Meta analyzes the data of its users and creates user profiles, which are then matched to the specified target audience of the ad campaign. At the end, the ad is finally displayed to the user. These are the activities Meta generates its revenue from. That's why advertisers can also be seen as Meta's primary customers. However, one can say that the content the user provides and the user profile Meta creates out of this are Meta's core revenue-making assets. The other activities of Meta support the primary activities. However, the discussed business model might change in the future. In October 2021, Meta announced its new name along with its new vision, creating the Metaverse. The Metaverse is a digital world where you can interact with other users in the form of an avatar or a hologram and buy digital assets and experiences from creators. Meta's main business model in this case would still classify as a multi-sided platform. However, the main revenue stream would shift from advertisement to payment fees from the creators. The new vision means that one can expect that Meta's focus on the social media and messaging apps will soon shift to its virtual and augmented reality products.
KPI stands for Key Performance Indicator, a quantifiable measure of performance over time for a specific objective. KPIs provide help people across the company or organization make better decisions. On the slide you can see two different definitions, one by Oxford Dictionary and the second one by the Macmillan Dictionary. When we talk about financial KPIs, the first thing to look at is profitable growth of company, which is key to any analysis. To perform it, we'll use a horizontal analysis. Horizontal analysis looks at change line by line between specific accounting periods, usually does it by quarters or years, whereas the vertical analysis, to which will come later, restates balance sheet or income statement amounts as a percentage of total assets or net sales. On this slide, we can see the profitable growth of Meta. The graph on the right side describes the growth of Meta within the last 3 years and shows us the CAGRs of revenue, gross profit, EBIT, and net income. CAGR is a compound annual growth rate and shows average annual growth rate over a period of time. The revenue CAGR of Meta over the last 3 years was around 15%, which is a good result, but we also should compare it with other companies and our competitors to see how Meta did in comparison to its peers or companies from other industries. This result, the revenue CAGR looks even more impressive if we compare it with Twitter, which had only 6.9%. However, another view of Meta, Snapchat, has shown a revenue CAGR of nearly 30%. However, the EBIT CAGR, if we look at EBIT CAGR, the only positive result is shown by Meta, whereas Twitter and Snapchat have shown negative results. Twitter has shown minus 60% CAGR, which doesn't seem to be. Whereas the horizontal analysis reveals changes over time, the vertical analysis shows the relationship of each item of the statements in percentage to its base. As we can see on the graph, on the table, the percentage amount of cost of revenue has increased over the last 3 years, which led to overall higher costs and expenses. Net income has changed correspondingly. It decreased from 39.6 in 2018 to 33.9 in 2020. We could also look at the gross profit, which is the difference between sales and cost of sales. It indicates how much business earns from sales, of its products and services, so it could be able to pay for the indirect costs like research and development or general administration costs. And even though the percentage amount of gross profit has decreased slightly, Meta still has shown a solid growth given the circumstances in the last 3 years. So in the case of Meta, we can see that in 2020 the gross margin slightly decreased, most probably due to pandemic. In general, a large drop in the gross margin is perceived as an alarming signal to investors. It may lead to lower net income, lower dividend payments, and a lower share price. However, given the circumstances and seeing that company increased net income from 18.5 billion to 29.1 billion in the year 2020, which is about 40% increase, we could state that Meta has everything under control. Which also could be interesting is that Meta has the highest cost of revenue in percentage in relation to its revenue in the last 3 years, which is 19.4 percentages. Also, we could see the constant upgrowth of indirect costs like marketing and sales and research and development. However, the cost for general administrative declines by 3.9 billion compared to last year. On the next slide, we could see the balance sheet of Meta, which will help us calculate other interesting financial KPIs, such as ability to pay back debt and the profitability KPIs. So now we come to the other financial KPIs, such as ability to pay back debt and profitability KPIs. First of all, we could look at the debt ratio, which is a good first indicator, but however it does not specifically evaluate the ability to pay interest expense. So that is why the most analysis use times interest earned ratio to measure the number of times the operating income can cover the interest expense. So let's take a look at this slide. As we can see, the debt ratio in 2019 was about 24 percentages, and it decreased to 19 percentages the next year. So yeah, it decreased by overall 5 percentage points. And the times interest ratio, earned ratio is just impressive, 1420. So it means that Meta could pay interest more than 1,420 times with its current income from operations, which shows a very strong financial position. On the contrary, we see that Twitter didn't show such good results within the last year. They had 31% in 2019 and 40% next year, and times interest earned ratio also showed the same tendency. It fell from 2.65 to 0.18 in a year, which the KPI which we also could find interesting is a current ratio. Meta had a current ratio of 4.4 in 2019 and increased to 5.05 the next year, whereas the 2.0 is also considered to be a very strong financial position. And on the contrary, current ratio of Twitter has decreased by 474 percentage points in just a year. As for profitability KPIs, we took return on revenue, return on assets, and return on equity. Return on revenue is a measure of company's profitability based on the amount of revenue generated. So it basically shows how effectively a company's management generates revenue from sales while also managing expenses. The return on assets is the best to compare with the companies within the same industry, which we've done with the Twitter. And the return on equity is the measure of company's net income divided by shareholders' equity. We could see that Meta has a better results in all the aspects. They generated 26% for each dollar of revenue in 2019 and 34% next year, whereas Twitter had a negative result in 2020. And when we look at the return on equity, it's considered that 14% is an acceptable ratio, whereas Meta had 23 in 2020 and 18% a year before. So an increase by 5 percentage points, whereas Twitter had 17% in 2019, which was above the acceptable ratio of 14%. However, the next year it fell to minus 14. As for non-financial KPIs, we took daily active users worldwide, and we compared the results to Twitter. On the right side, we could see two graphs describing the tendencies, which both are positive. We could see that the increase of the daily active users worldwide by Facebook within the last 3 years was by 38%, whereas Twitter had shown a better result by 48% in comparison to 2018. So we come to the third part of our presentation, sustainability. And due to Bronfman's Commission's report, sustainable development means the meeting the needs of the present without compromising the ability of future generations to meet their needs. We'll take sustainability report of Meta to show the results of the last years. As the most interesting things, we should mention that Meta achieved 100% usage of renewable energy for its global operations, and it has over 2.8 gigawatts of wind and solar projects online. And what goes for water usage, 2.2 million cubic meters of water restored in 2020, and Facebook Meta luckily restored nearly as much water as they consume to the watersheds where they operate.
SWOT analysis. Let's begin with the strengths of the company. First, everyone knows the company's brand, so it definitely has a strong brand recognition. According to Forbes, Facebook was ranked in 2020 as the 5th leading and the most valuable brand with $70 billion, which is quite an advantage regarding to the other companies in the industry. Second, Meta has a very strong financial position with huge revenue and almost no debt. Therefore, Meta has a solid ability to meet its obligations. Moreover, Meta already understands that it shouldn't put all its eggs in one basket, choosing instead to spread its investments across different areas to enhance its portfolio. So Meta diversification is a major strength. Furthermore, nothing can guarantee the strength, development, and the success of a company more than the loyalty of its customers. In the end of the third quarter of 2021, the number of daily Facebook users was nearly 2 billion. Last but not least, the focus on research and development. Regardless of the business industry, success in the digital age requires technological innovations. Meta is one of the global leaders in the spending on this area. Let's take our rosy glasses and consider some of the company's weaknesses. First, the overdependence on advertisements. Meta generates substantially almost all of its revenues from selling ads. This sole dependency on the advertisements for gaining revenue is an essential weakness of the company. User privacy concern. According to Fox Media Tech Survey in 2020, asking Americans about the reasons for not using Facebook comes the privacy concern on the top. If Meta couldn't prevent attacks in the future and the data breach, it will damage its business and it will diminish its competitive position. Third, spreading fake news. According to Statista 66 of the journalist ranked Facebook as the platform with the most spread of disinformation about COVID-19. And third on the list came WhatsApp. Allegation on racial bias. Only 4% of the company employees are black. Moreover, the company has allowing advertisers to exclude minority groups from specific privileges. Also, the report, which was published by the Washington Post, exposed the company racist practice against black users. The anger toward the company has forced over 750 companies to stop advertising on the platform. In the term of opportunities, first, support small and medium businesses. Meta already has taken steps to attract the small business leaders, like Facebook Invoice Fast Track program and funding a new small business by connecting small business owners with credit providers, which can be an opportunity to expand to the business advisory sector and may lead Meta's app in the near future to be used as the main virtual market for small businesses. Second, venturing into augmented reality and virtual reality. If the company succeeds with its experiment of launching of metaverse in the US and Canada, this will open the new road to the company in the this will open the new world in the to the company in the virtual reality world and will gain from it billions of dollars. Third, target different audiences through encourage and attract more and new creators and by providing its apps in another new languages to enter and expand into new markets. Fourth, expansion through new acquisition, just like Meta did before. One of the biggest threats for Meta is the loss of potential and already users. If Meta fails to retain existing users or add new users, its revenue, financial results, and business may be significantly harmed. Fake accounts. Many people use fake accounts to post and manage, as well as manage groups as well as pages in purpose of manipulating public discussion, spreading racist and hate ideas, many of which could not be detected and disabled by Meta automated system. Third, the competition. Even though Meta is the dominant of the social media industry, however, Meta face significant competition in every aspect of their business from various sources. Fourth, bans and increased regulations. Not just in the US, but in another market too. The level of regulation faced by Meta is very high. Meta has already paid hefty fines in various markets. On the other hand, autocratic governments are restricting access to Facebook to curb freedom of speech such in China, North Korea, and Iran. As a result, Meta's revenue and business in these regions will be adversely affected. Recommendations. We would recommend Meta to improve its reputation by settling lawsuits, rebuild customer trust by applying more transparency procedures, moreover hiring more women and colorful people, and investing in data analysis and statistics. As we saw, Meta is one of the most successful companies in the world, with a valuable brand as well as a strong and flexible financial position, which enable to expand its business and keep it improving. Thanks for listening.